Welcome everyone to today's daily report market analysis videos with me, Richard Perry, market analyst at Hantec on Wednesday the 20th of November. Risk aversion is coming into the markets again. There was certainly a suggestion that the Chinese are getting a little bit concerned and more pessimistic over the prospects of a trade deal with the US, and that has sort of been exacerbated now by Donald Trump talking in a meeting about the prospect of actually increasing tariffs again, and that has really impacted markets in the last sort of 24 hours really. We can see that Treasury yields continue to pull lower as the safe haven flows continue. You've seen VIX volatility coming higher today. Look at the Chinese yuan weakening to 2-week lows that on the yuan as the dollar yuan rate rises. And what we also see is the fact that gold continues to rally. We've got dollar yen, or the yen continues to strengthen with dollar yen lower, and yen up, performing well across the forex majors. And broadly speaking, we've seen euro lower, sterling lower, and also Aussie and Kiwi lower as well. Look at the equity markets. We saw Wall Street falling back into the close. Actually, the Dow closed with a bearish engulfing candlestick pattern, which is a negative near-term signal. And US futures are another sort of 0.4% lower early morning today, and that has been a real drag on European equity markets, all around about 0.75%, maybe up towards 1% lower, and being hit. So the other thing I wanted to talk about was oil. Oil has fallen sharply in the last 2 days. Suggestions that Russia wouldn't be partaking in any further production cuts, or certainly wouldn't be supportive of any further production cuts from OPEC. And that has hit the oil price quite considerably in the last 48 hours. So yeah, broadly speaking, not looking all that great in terms of risk appetite. Now, in terms of data points today, not a great deal. This afternoon, we're looking out towards the EIA inventories, another inventory build expected for EIA, and 1.5 million barrels is the expectation of build there. So again, that wouldn't necessarily help that falling oil price. And then we've got the Fed meeting minutes tonight. The Fed cut interest rates by 25 basis points at the last meeting. The markets are generally sort of the opinion that the Fed's now on hold for the time to come, but certainly if the trade dispute does take a turn for the worse, then that's not going to do the prospects for US rates all that well, and the market could start to price for further rate cuts. But it'll be interesting to see how the Fed minutes are perceived tonight. Anyway, now let's look at my chart of the day, which is Euro Kiwi. Now, what we have seen is the Euro, which has been under a little bit of pressure, broadly speaking, in the last few weeks. But also the Kiwi holding up pretty well relatively, given the fact that the RBNZ didn't cut rates last week. And we saw that Euro Kiwi fell sharply below the 173 mark, which is a pivot line. You can see that old June high became pivotal through September, October, sharply down below that, and now forming the basis of resistance. You've got this downtrend that also falls around the 73.50 mark today. But look at the momentum indicators, increasingly corrective. MACD lines, multi-month lows, as are RSI levels, sort of confirming the breakdown and real shift, I think, in sentiment on Euro Kiwi. So the fact that the market has rebounded a little bit early doors today, fallen over again underneath 173, seems to be a little chance to sell. And I think that a retest of that 171.50 mark from last week is likely to be seen soon, and then probably back towards 170 big figure. So I think Euro Kiwi is one chart to watch. So we have this sort of growing outlook where I think that risk aversion is still playing out, but certainly the Kiwi is an interesting performer in the fact that it has still maintained that strength of performance in the last few days. So I wish you good luck in your trading. Click here to subscribe to our analysis videos, and also go to our website to sign up for our webinars.